In the last 18 months, 3 major watch brands have done something the industry hasn't seen in decades. They've gone back into the archives, pulled out their most iconic designs and launched them as new watches, with new price tags.
Universal Genève, that for 30 years came back this spring with the Polerouter started at $17,000. Omega relaunched the pipe and Constellation dial as the Observatory collection, still starting at $11,000. And Longines brought back the Ultra-Chron, almost note perfect to the 1967 original.
3 revivals, 3 very different approaches, and 3 very different effects on the vintage market, which is what nobody is actually talking about.
Because if you already own an original Polerouter or you are thinking about buying one, what these brands just did matters a lot to you. It may have already changed the price you'd pay or get.
Today we're breaking down exactly how brand revivals move the vintage market. Not the press release version, the actual mechanics.
Before we get into what's happening right now, it's worth establishing that this isn't new. Brands have been reviving heritage models for decades, and every single time, the vintage market reacts.
The clearest example in recent memory is the IWC Engineer. The original Engineer SL from 1976 was designed by Gerald Genta, the same designer behind the Royal Oak, the Nautilus and, as we'll get to in a moment, Universal Geneve's own Polerouter. IWC relaunched it in 2023 after the model had been out of production since the late 80s.
Within 12 months of that announcement, vintage Engineer SL references that were trading quietly in the $2,000 to $3,000 range started appearing at $5,000, $6,000, sometimes $7,000. The brand had done nothing except remind the world the original existed.
That's the visibility effect, and it's the first of 3 mechanisms we're going to talk about today. When a brand makes noise about a heritage model, it creates awareness in people who had never heard of the original. Some of those people look at the price of the new watch, then look at the price of the vintage and make a very obvious calculation.
The Engineer SL at $6,000 still looks like a steal against a modern edition at $9,000 in steel. That gap is the engine of the vintage price inflation, and right now the same engine is running on 3 separate tracks simultaneously.
Universal Genève is probably the most dramatic case study we have right now, because it isn't a re-edition, it's a full resurrection. The brand stopped making watches in the late 80s. It existed in name only for 30 years, passing through several ownership changes, until Breitland's parent company, Partners Group, acquired it in late 2023.
CEO Ultra-Chron confirmed the plan almost immediately. Universal Genève would be positioned about Breitland, in-house movements, Geneva address, launch in 2025 or 2026, and critically, prices to match.
The launch came in April 26 at Watches and Wonders. 4 collections: the Polerouter, the Compact Chronograph, the Cabriolet and the Disco Mini. The Polerouter in steel starts at around $17,000, the Compacts at $20,000. Production for all of 2026 is approximately 2,000 pieces.
Here's the tension. In its original incarnation, Universal Genève was positioned alongside Omega and Rolex, precision tool watches for professionals and serious collectors, not entry luxury, not budget, but not above Rolex either. The brand's historical DNA is a middle-tier Swiss excellence, not haute horology.
And vintage collectors noticed immediately. One response that circulated widely online after the launch said, and I'm paraphrasing here, "As a vintage UG lover, I feel disappointed, frankly gutted, that their new positioning is in segment totally different from what they used to be in."
Another collector asked publicly whether anyone had told George Ken that the pandemic watch bubble burst a couple years back. The Polerouter pricing in that collector's world was downright silly.
But here's what's interesting and what those collectors are perhaps missing. The backlash from existing enthusiasts is almost irrelevant to what the revival is actually doing to vintage prices, because the mechanism driving prices isn't the existing collectors base. It's the new audience the launch creates. The Omega case is different in a crucial way. This isn't a brand resurrection. Omega never went anywhere. This is a design language revival. Omega launched the Constellation Observatory in March 2026 at the ground-up redesign of a two-hand dress watch built around the pipe and dial the original Constellation carried from 1954 through the early 70s.
9 references at launch, 4 in Omega's proprietary Omega Steel, 5 in precious metals. Steel starts at $10,900. Gold starts at $37,900. The collection is 39.4mm across and 12.23mm thick, notably larger than the originals, which ran between 34 and 36mm.
The technical headline is that it's the first two-hand watch ever to earn MEDA's Master Chronometer certification, which required Omega to develop a new acoustic testing method that doesn't depend on a second hand. Genuinely impressive.
But before we get to the Observatory's effect on the vintage prices, it's worth asking a question that almost nobody in the press coverage asked. Did Omega launch the Observatory because the vintage pipe pen was already hot? Because the data suggests that the answer is yes, and that changes how we read the whole story.
The vintage pipe pen Constellation had become one of the most talked about references in the collector market well before the Observatory was announced. On Chrono24, right now, clean steel examples of the reference 168.005 are starting from $3,000. The 168.010 in gold and steel are starting from $2,800. These are not cheap watches from what they are. They are 1960s Omega dress pieces.
According to the Watch Charge data, the reference 168.010 was already up 113% over the previous 5 years as of February 2026, before the Observatory launch. It was outperforming the overall market index by 106% and selling faster than 93% of watches on the secondary market. The pipe pen was already one of the hottest references in its category.
Brands like Omega watch the secondary market very closely. When a vintage reference starts consistently outperforming, it tells them two things. There is a demand for the design language, and there is a customer willing to pay for it. The Observatory isn't just a tribute to the archives, it's a response to a market signal the vintage world sent first.
Which means the casualty here runs both ways. The vintage pipe pen drove the Observatory launch, and the Observatory launch is now amplifying interest in the vintage pipe pen. The new watch created awareness in people who then looked backwards, and what they found was already expensive, and getting more so.
But there is a complication that matters if you're thinking about the long-term trajectory. The Observatory is 38.4mm. The originals were 34 to 36mm. Purists have been very vocal. These are not the same watch for the same person.
When the re-edition and the original diverge significantly in proportions or the spirit, the market decouple. An Observatory attracts one type of buyer and the original pipe pen attracts a different type, which means the halo effect is weaker than it looks. And new watch create awareness, but it doesn't fully redirect its own buyers toward vintage, because they are not looking for the same thing. The Longines Ultra-Chron revival is the control case in this experiment. Longines brought back the Ultra-Chron Classic in late 2025, a near exact reissue of the 1967 original. Crosshair dial, domed silver sunray finish, trapezoidal date window at 3 o'clock, and critically the same 36,000 vibration from our high frequency movement as the original, two sizes, 37mm and 40mm.
This is a faithful revival. period correct proportions, the same mechanical philosophy, accessible pricing well under 2,000 euros. It's not trying to be above Breitling. It's not positioning itself as the hot horology. It's just the Ultra-Chron made again.
And this is where the third mechanism operates differently to the other two. When a re-edition is this faithful to the original and priced this accessibly, it doesn't inflate vintage, it competes with it. A collector weighting a vintage Ultra-Chron against a new one has a genuine choice. The vintage was history and patina. The new one has a warranty, a silicone balance spring, and no service anxiety.
The Chrono 24 numbers make this concrete. A vintage Ultra-Chron in steel, good condition, is currently sitting at $500 to around $1,000. The new 2025 Classic reissue trades at $3,000 to $3,400 on the secondary market. That's a 3 to 5 times premium for the new version, meaning the vintage here actually has almost no upward pricing pressure from the revival at all.
That competition puts a ceiling on the vintage prices. The vintage Ultra-Chron can't move dramatically about the new version without losing its value argument entirely. So a faithful revival done right actually stabilizes rather than inflates.
Which means the effect a revival has on vintage prices depends almost entirely on how faithfully it was executed and how it's priced relative to the original historical positioning. Those two variables explain everything. So let's put this together cleanly. When a brand revives a heritage model or returns from the dead, there are three things that can happen to vintage prices. And they don't always all happen at once.
The first is the visibility effect. New awareness drives new buyers into the vintage market. They discover originals exist, find them priced below the new version, and buy. Demand goes up. Prices follow. This is the strongest when the brand has been dormant, like UG, because the new launch creates awareness from zero.
The second is the pricing anchor effect. The new watch sets a reference point that makes vintage look cheap by comparison. The bigger the gap between new retail and vintage market price, the stronger this effect. Right now, the gap is enormous across all three brands we've discussed.
The third is the decoupling effect, and this is the one that can disappoint collectors. When the re-edition diverges too far from the original in size, spirit, and target buyer, the two markets separate. The halo effect weakens. The Observatory is the clearest example. A 39.4mm modern dress watch and a 34mm precision chronometer are not the same market.
And then there's the fourth scenario, which is the Longines case, a faithful accessible revival that completes directly with vintage and puts a ceiling on how high original prices can go.
So what does this mean practically if you are a collector or someone considering getting into vintage watches?
The honest answer is that the window between a brand announcing a revival and vintage prices, fully repricing is where the most interesting buying happens. We're in that window right now with Universal Genève. The launch happened in April. The press covered it. New buyers are discovering the brand. But vintage Polerouter and complex prices haven't fully caught up yet. The market moves slower than the news cycle.
The same was true of the Pipe and Constellation before the Observatory launched. If you bought a reference 168.010 18 months ago, you bought into a trend before it landed. That watch was up over 100% in 5 years, and the Observatory announcement accelerated the second half of that move.
The watches we'll be watching closely right now and pieces we regularly handle at DuMarko are original complex references. The Nina Rindt Association, the chronograph complication, the 3-register layout, genuine collector pieces that are still findable at prices that will look very different in 2 years if UG sustains its relaunch.
The caveat, and this is important, is that not every revival succeeds. Several brand resurrections in the last decade quietly dissolved within 3 years. If UG struggles to sell at 17,000, the vintage market could give back gains just as fast as it made them.
Which is why we'd say understand the mechanics, don't speculate beyond your means, and buy pieces you genuinely love. Market dynamics are a tailwind, not a strategy.
Brand revivals are one of the most interesting forces in the vintage watch market right now, and 2025 and 2026 have given us 3 simultaneous case studies at very different price points and with very different approaches.
Universal, Genève, Omega, Longines, 3 brands that looked back into the archive and said, this is worth bringing back. And in each case, the vintage market responded, sometimes before the new watch even shipped.
The thing is, those 3 aren't the only candidates. There are brands sitting quietly in the secondary market right now, names with genuine history, iconic references, devoted collector communities that haven't had their moment yet.
And that's where we spend a lot of our time at DuMarko. Not chasing what's already been covered, but handling pieces from brands and references that we think deserve more attention than they currently get. Watches that tell a real story, mechanically, historically, aesthetically.
We are not going to tell you which ones, because frankly, that's the work. Learning to see it before the announcement. But if you've been watching this channel for a while, you already know the kind of watches we gravitate towards.
Subscribe if this kind of analysis is useful to you. We look at the market as we actually see it, not as the press releases describe it.
See you next time.